it takes a very special and uniquely qualified and gifted person to bridge the gap of those two extremes. So, my private client, by the way, all of my private clients run laps around me in their area of expertise. So from the standpoint of entrepreneurship, I mean, they just crush it. But the expertise that I have with creating cash flow and finding deals that are on the cusp of, a big valuation bump or a big exit, it's just a different skill set. And I know they don't have it yet, but I want to equip them with it.
And here we go. I want to first just say thank you so much, Justin, for giving us some of your time and for being here. For those of you guys that don't know Justin, I have the privilege and honor of knowing Justin for quite some time. But I want to play this quick video. I shared it. It's a sizzle reel. Some of you watched it, maybe you didn't. But I think this is going to capture a little bit of what Justin's going to get a chance to bring to this convo. I'm going to play it a little fast speed, but check this out.
He's going to talk about lessons learned. Let's bring him up, Mr. Justin Donald.
This is my great friend, our great friend, Justin Donald.
I cannot think of a better individual to kick off our day two. Let's bring up Mr. Justin Donald.
The reason I've been investing more actively is because of Justin Donald. Now, the thing about Justin that makes him really unique is this guy studies and has found and researched tools and strategies that very few people have ever had access to. And as a result, he's built a huge net worth in a very short period of time with very few mistakes because he's built a system that consistently produces predictable results.
I really just want to teach people, here's how you can invest and not lose money and make a good return.
The impact that this is going to have on me and my family and our income in the next 12 months, in the next 5 years, the next 10 years is literally worth millions of dollars. The relationship that I have with Justin has transformed my life. Full stop. And I'll say it again. Justin Donald has transformed my life.
Work on your terms and on what you're passionate about working on.
The way that he approaches investing is very attractive to me. He's always looking for protecting against the downside, which is my number one priority, is to ensure that I don't lose money. And that is his priority as well.
When I go to someone for advice on running a business or finances and building wealth, he's one of the first people I think of.
As a result of Justin's guidance, my finances have grown, my income has grown, my wealth has grown, and now I have asset protection, which I didn't have before, so that I have peace of mind knowing that the fortune, the wealth that I've built for my family, that I'm continuing to build, is safe and protected.
When I was looking for deals, I may see 3-4 deals a month. But when I met him, I found that he was seeing hundreds of deals over the course of a year. And he was able to cherry pick the best ones that were just right for him and his investment style.
I really love his pillars of investing, his 10 commandments of lifestyle investing, especially hedging risk. These have been some of the safest investments that I've made. Yet at the same time, they've been paying off better than the many other ones I've had in the past.
Any chance that you have to get into his world, you'll feel supported, you'll feel safe, you'll feel protected, and it will be explained to you in a way that actually makes sense.
It seems like everything that Justin touches turns to gold. And it's not just because he's lucky, it's because he knows what he's talking about, he does the research, he lives what he teaches, and most importantly, he does his due diligence. And so I trust Justin 100%.
What I love about Justin is his commitment to lifelong learning. I mean, this guy is intense when it comes to his subject matter.
And I think his investment strategy and his wealth building strategy has always been one aimed at financial freedom and just having the life you want. So Justin can either work extremely hard, grind it out, or he can take time off with his lovely family, with Jen and Savannah, and do whatever he chooses to do.
He's got a huge network of service professionals and smart people, but also that database of deals means he's always got something really, really good to get involved in. And he's the kind of guy who won't let you make stupid mistakes because he's got a system that just flat out works. So if you ever get a chance to work with Justin, do it.
Justin, how many times have you watched that video of yourself?
Well, it's funny. I don't even know how you got that because I don't know that I've ever actually used it. So it was nice actually seeing it used. I think that's the second time I've watched it.
Nice.
It was created a long time ago, but for whatever reason, I just don't ever use it.
Well, you're welcome. I'm full of surprises, Justin. I'm full of surprises, brother. And the audience you're speaking to is a wide variety of different individuals, many of which are in the entrepreneur space. And I just wanted to, I pulled this picture from the archives. And just for those of you who know me or don't know me, I've known Justin for quite some time. This was taken today because he's wearing the same shirt, actually. See that?
I love it.
But I respect everything that that you've done. In fact, I've been following you, Justin, since I watched your Cutco training videos when I was a branch manager. You running the train, it was like VHS on a videotape or a DVD with your marker tossing in the air, or drinking out of the big water bottle. And I used to study and watch you and learn from you. And now having the chance to study you and watch you and read your book and learn everything that you're doing inside of your community is remarkable. And for those of you who don't know me, I'm going to be interviewing Justin today. My name is Mike Abramowitz. I've met many of you before. Some of you I haven't. Co-host of the Better Than Rich Show podcast as well. But this is definitely not about me. You do not care about me. You care about Justin Donald, #1 Wall Street bestseller, USA Today bestseller, #8 on Amazon, philanthropist, created 8-figure net worth in under 2 years, host of the Lifestyle Investor podcast, Tiger 21 member. I mean, the list goes on and on. What I respect most is the life that you've built with Jennifer and Savannah, and I'm just super honored and excited. We ended up getting 63 comments of questions for you, so we're going to go through every one of them. I'm just kidding. I also sent you a list of my 19 questions that I came up with for you. So I really want to start. One of the biggest questions that a lot of people have been asking is one of which is in your book. It's like the lifestyle investor. Everyone asks you this. And I think it's a good place to start, which is, what is the lifestyle? Most people on here are the entrepreneur types where they're building businesses or whatnot. And you were in that arena. You built these businesses, you worked hard, but then you kind of had this shift. What was that shift of like shifting to this lifestyle? What is the lifestyle you wanted? Where did all that come from? If you could kind of fill us in, that'd be awesome.
Sure. Yeah, I'm excited to answer questions, and I'm a total open book. So this will be a lot of fun. So I just got to the point where, a season of my life, I worked really hard. I mean, I was the grinder. I did what I needed to do to get the results that I desired to get. But at a certain point in time, I just realized that playbook wasn't going to work long term. So short term, it could work. And I'm happy that I was able to kind of flex my work ethic muscles and know that I can do that when I need to. But I also realized working the long hours that I did and not having boundaries for personal time or family time, it's not sustainable and it's not enjoyable, at least for me. So I guess after many busy seasons in a couple of different businesses, 2 that I was running at the same time, and one of them while in Cutco, it was very apparent to me that in this season, hey, I can work hard, I can put in this time, but I don't want to be working evenings or weekends or crazy hours when I'm married, when I've got, kids. So to me, it was just kind of an eye opener that there was this whole other world that existed where instead of trading time for money, you actually trade capital for more money. You buy assets that produce money. And I just had this big epiphany that it doesn't always have to be like this. And if I can figure this out now, if I can learn a little bit and move towards the ideal lifestyle that I want today, I don't have to have it all today, but if I can recognize I want something different in the future and then just move slowly towards it, but each day getting a little better, then I can get there. And that really has paid off.
Well, and by the way, everyone that's here live, post your questions in the chat. I'm going to post selfishly. This is a conversation between me and Justin, and you all get a chance to hang out. Justin, my question for you is, you went to Tony Robbins. You mentioned on one of the podcast interviews, you had this big breakthrough about seeing Tony, what he does with his mastermind group. And now you have clients who pay you $500,000 to $1 million. My first question is, what do you do for them? And we would like as much detail that you're willing to give us. And then you have a wait list of 50 people plus 100 plus people in your mastermind that pay you $50,000 a year. What are these people getting access to? Let's set the framework there. Start with, what are you teaching these people that all of us can say, all right, we want to learn some of this stuff, the Cliff Notes version of your 10 commandments. I have them all listed out, but what's showing up?
Well, that's a fun question. And I'm such a huge Tony Robbins fan. I think this community is a huge community proponent of Tony Robbins. I've attended everything he's ever done. And I remember at one of the first events, he talked about how he coaches people for $1 million a year and then takes a percentage of the upside. And I remember thinking to myself, that's really cool. I can't afford to do this, but it'd be really cool to be able to afford it. And then I thought it'd be really cool to like be able to coach people and be able to deliver enough value that they would come and listen to what you had to say. So in the back of my mind, I just always thought, hey, that'd be really cool to do. And a good number of years ago, I had a coaching client and I've been coaching in some capacity most of my professional life, but from the standpoint of, helping founders scale, I mean, I've been doing that for about a decade. And then for the past 5 years, I've really spent a lot of time helping people just grow their wealth and create more cash flow, buy their time back. And so I decided, since I have paid people to coach, and the most expensive coaching contract I had ever paid was $250,000, I figured, well, if I was willing to pay this, someone else would likely be willing to pay this, because I can actually, for mine, it was harder to, show the math, how to like quantitatively say, hey, you got X dollars of a return. Whereas I could do that financially. I could do that with the investments or with the cash flow. And so I remember the first coaching client that I brought on in this capacity, I basically shared with him my goal and mission was to help him. This individual had basically sold his company, sold it for a lot. I mean, we're talking about a 9-figure exit. And after taxes, after some poor investments, after a handful of other things, he came to me with not a whole lot left, but had an expensive lifestyle that he didn't want to decrease. And so I had to help him figure out how to get to about $2 million a year in passive income to support the lifestyle that was ideal for him. And I just knew that I could do that. And so when I basically made my offer, he didn't question it. He just asked some questions supporting what he would learn from it. And it was just my big aha that, wow, if you find the right fit, people can afford virtually anything. And so I'd say my private clients are kind of like a white glove service. And I've had a wait list here for quite some time. I don't know that I'm going to have anything open up for probably a year or two, but they're just the right person, the right fit. And I walk them from A to Z through everything financially. And it's a deep dive. I mean, just the form that they submit to me with all their financials, their business, their livelihood. It's about 20 pages of just questions. So when the form is complete, it's like a 50-page document. And we just dissect everything about their world and where they want to go. So the mastermind is kind of like a lower version of that, so I don't do as much hand holding, but I do cover the same things, and I teach in more of a group style. And we've got people from all across the world that are part of it. For a while, I had it capped at 100 people, and that was it. I wasn't going above it. And our founding members said, I call them our OGs. They said, well, why would we ever block people that are perfect for the group? We want exposure to as many sharp people as we can. And so I opened it back up this year. And so we're at about 130 members. And it's not going to be a huge group. I mean, the goal is not scale. The goal is right fit. But I provide deal flow to my private clients and to the mastermind, and a little bit of all kinds of different deals. Last year, 3 of the deals that we did ended up going public. So that was really big for the mastermind. And we got rated a top 5 mastermind of every mastermind out there for 2022, which was a big honor and really cool. And I think that they kind of got their hands on some of the financials that the group has been able to experience.
That's great. And I start there because I'm going to start asking the specifics, because I had the privilege as a guest on sitting in on one of those groups and seeing what you're offering to the community and to your mastermind. It's like these unbelievable deals that are, like you call them, invisible deals that exist. I have one more double click question on when you said, I'm going to I paid $250,000. So if I was willing to do that, maybe I could attract myself. If there's an entrepreneur on here that is maybe settling for a little bit less than what they think they could be charging people, how did you negotiate with yourself? Because at the time, I don't think you were a 9-figure earner or had that and that worth, but you were coaching someone who was 9 figures and maybe you weren't there. I got to lead to believe there was some small piece of insecurity that maybe showed up before you were able to present, hey, I'd like for you to pay me $250,000 or and a slice of your gains. How do you offset that? If like I think about someone, who's running a business and they're so familiar charging $2,000 because that's what the industry is. It's like, I know I could get more and I know people are willing to pay me more. How did you negotiate that with yourself to say, you know what, I'm just going to go for this and make a larger offer?
Well, at the end of the day, I just know that I can offer the value. Now, was I nervous? Heck yeah. The first time I ever pitched my own services at that, price point, yeah, I was really nervous. In the back of my mind, I'm like, all right, this guy's, he could be totally uninterested. And I was so surprised that his first question had nothing to do with price. I mean, he didn't even ask a question about price. It was everything about like, what's the cadence? What's he going to get? I mean, it was all about the deliverables. And I just know that there's a whole different space between, being an entrepreneur and being an investor. And what a lot of entrepreneurs find is that when they have exits or they're making a lot of money and they think that they're just as good at investing as they are at entrepreneurship, they end up in a world of hurt because it is two different skill sets. And it takes a very special and uniquely qualified and gifted person to bridge the gap of those two extremes. So, my private client, by the way, all of my private clients run laps around me in their area of expertise. So from the standpoint of entrepreneurship, I mean, they just crush it. But the expertise that I have with creating cash flow and finding deals that are on the cusp of, a big valuation bump or a big exit, it's just a different skill set. And I know they don't have it yet, but I want to equip them with it.
Mm. Well,
and another thing to point out is like, sometimes people look at that and they say, oh my goodness, that's a lot of money. But he made, in one deal in one quarter, over $500,000. One deal, one quarter, one return. And we've done a whole bunch, so like he made his money back. Not to mention I had, one tax saving strategy that I showed him. And same thing for our mastermind where, if someone's an entrepreneur of any type, they can easily make back whatever their cost of engagement is just in the tax savings. So it makes the sell a lot easier and, less pressure because there's so many different nuances and facets that can help people get the results, get the 10x results they want for the investment.
Yeah, especially when you're leading from what you said, it didn't matter about the price. It's like, what am I offering? What are you going to give to the person or to your client? And making sure you're leading with that more so than what you're offering them. I think it's a very simple response, but so important for every entrepreneur to hear. So here's the hard hitting questions, Justin, that everyone, I would love to know the answers to these again, selfishly for me. And then there's a couple of questions in the chat too. So right now, you mentioned on one of the episodes that you were interviewed on that there's constant changes of the cycles and try to capitalize during this time. There's lots of change going on. So the question is like, where do you put your money? So it's like, what are the innovations that we can capitalize on right now? I know you mentioned cannabis. I know you mentioned storage units. I know you've mentioned mobile home parks, and there's reasons behind some of those. And then you also talked a little bit about like what does the government want, and studying agriculture, housing, renewable energy, some of these things. Can you speak to if someone in the group right now is sitting on maybe $10,000 or $50,000 in capital or $100,000 in capital, what are the innovations that they should be focusing on? Where should they be looking to potentially position themselves in some of these areas as far as what you've mentioned in some of the previous podcasts?
Sure. And I probably should start off with the fact that I do have a bias towards private investments, private equity to public equities or the stock market. I am just not a huge proponent of it. So, one of you, Valerie, is asking the question of dollar cost averaging into the market. I don't like the fickleness of the stock market and the lack of control. So I have a very small percentage of my net worth in the stock market. I like being in investments where I have control, where I have say, that, consumer confidence can't totally disrupt and destroy my returns in 1 second because someone sent a tweet. So that to me is really tough to stomach. And I think most people are educated by the groups, the organizations, the agencies that Wall Street has influence with. So like our educational system, our financial planners, like anywhere you hear, it's like, put money in the stock market. And that works great until you want to retire today. Or that works great until you want to retire in 2008 or 9 or 10, right? And so I just think it's dangerous to have all your money in any single thing, whatever it is. So if the vast majority of your net worth is in any single area, that to me is cause for concern. And I think most people, if they are not an entrepreneur, have the majority of their money in the stock market. If they are, they invest the majority of their money into their business, with the secondary being the stock market. And then for some crazy reason, people think that the next best thing is to be an angel investor and just throw money at different companies that the odds are not good that they're going to do well. It's basically like a 0% interest loan for an undetermined period of time and a high risk asset. And then every now and again, you find people that do real estate, and I think that's gaining more and more popularity. And it's funny because the last 13, 14 years, everyone looks like a genius no matter what they've done. So you just have to be careful. I am still a fan of anything that is uncorrelated to the stock market. And by the way, I do think there's a time and a place to be in the stock market. I just think most people think that people make their wealth in the stock market. And the reality is people make their wealth somewhere else and they put it in the stock market to, over the long haul, preserve it. And so that's a big, misconception that a lot of people have. So what do I like right now? I like things that cash flow. If it cash flows, then you're never in a position where you have to sell. If you can cover your debt service and all your expenses, it doesn't matter if the economy tanks because you don't have to sell. You can choose whenever you want to sell and you can wait out a bad cycle. So, and that could be in anything. It doesn't have to be in real estate. It could be in an operating company. It could be, a company that you buy and fully run or start and fully run. I think it's a lot less risky to buy something that's already existing. But there are definitely some places that I think are going to be strong. I still think that long-term, affordable housing is always going to be a thing. I love mobile home parks. I think it's about as sure of a bet as you're going to find. I think RV parks are pretty incredible. And I can weigh in a little bit more on the comment here later from Michelle.
Yeah, from Michelle. Yeah, the RV parks for sure.
Yeah, because the development is a whole lot different than buying existing, but we can get into that later. But I like that asset class. It's taking off. It's booming. I think that industrial warehouses and distribution centers are still going to be strong. Anything that supports e-commerce, cannabis, hemp, CBD, like that space, specifically cannabis, I do think it's the wild, wild west. I do think there are going to be some returns that are going to be similar to, prohibition times, but you're going to have like kind of ups and the downs right now of that, especially if you're doing it in public equities. But on the private side, it's a lot less volatile. So, those are just a few areas, a few thoughts. I mean, I still think Bitcoin is a really good hedge and a really good idea. I share that I think I don't give financial advice, but what I think for myself and what I try to coach people with is that it's probably not a bad move to have a position in that the way that you would maybe in gold. So maybe it's 0.5% or 1% or maybe even up to 5% of your net worth. I don't think that's a bad play. I don't think that doing that, in gold is a bad play. So I don't know that I invest in gold to make money. I invest in gold to not lose money, right? As an inflation hedge. And I think I think it's a smart play. I wouldn't put all my money in gold because I wouldn't put all my money in any single thing. I know mobile home parks better than I know anything because I've been doing them the longest, about 15 years. And I don't even have all my money in mobile home parks.
And yeah, I know with the mobile home parks, there are certain states that you say you're like, I would not touch that state for a mobile home park. And then there are certain states that you are really drawn to. I know a lot of us are here in the Tampa Bay area in Florida. And you could correct me if I'm wrong. I seem to remember you saying you wouldn't touch Florida with a 10-foot pole or something. If I, I don't want to put words in your mouth.
I should clarify that. So the states I would just never touch are California and New York, probably, Massachusetts too, but definitely California, New York, and New Jersey, like any place where it's like you are fighting everyone. You're fighting the government to get out non-payers and evict them. Like any place where the laws favor squatters or people who don't pay their rent, you do not want to be in business.
How could you find that list of those states? If somebody wanted to find the states to avoid with what you just said, does that exist somewhere?
Oh, you could, just go on DuckDuckGo and enter it in. I mean, you could use Google, but they're going to track all your stuff. So, I mean, either way, tons of them. You'll see the ones, so you have pro-tenant states and pro-business owner states. I like pro-business owner states. Now, the only reason I don't like Florida is because prices are astronomical. I mean, if you can find someone who's wanting to sell their portfolio or sell a park and maybe it's a baby boomer who's looking to retire. I mean, that could be incredible if it's not being marked up by the brokers and, any of the real estate agents. So I love Florida. I just think it's hard to find a good price. You're like buying at like 4.5, 5 caps. That is really hard to make money.
So, and I don't want to oversimplify this, but hypothetically, you're saying if I Google searched one of the pro-biz owner states, i.e., I don't know, whatever that is, in Indiana, could that be one? Nebraska?
Indiana's probably pretty favorable. Illinois is not.
So let's go with Indiana. I go to Google or DuckDuckGo. I look up mobile home parks, find the contact info, find the owner, and I cold call that person saying, "Hi, I'm an investor. I see you have a mobile home park. I'd like to, are you at an age where you want to like kind of step away from the business, get paid to not have to manage it, and I'll step in and kind of like run the show for you. You get money, and then I'll kind of step in and take care of the responsibilities." Am I missing something? I got to be missing something on this. I'm sure there's like 17 steps I'm missing. And I know that's your course of what you offer, but if somebody like knows nothing and they want to just like kind of take the steps, obviously they could take your course. What am I missing here? I know I'm missing stuff.
Well, I think just doing that is one of the best things you could ever do, because you got to do it at scale, right? So I found my first park after calling about 100 owners, and I finally found one who said, yeah. And by the way, my question was simple. My question was, hey, I'm reaching out because I am in the market to buy a mobile home park. I was curious if you're interested in selling yours. That's it. That was my approach. Really simple, really short. If they say no, I just say, hey, can I follow up with you in 6 months and just see if you're interested then? And generally they say yes. Sometimes they say no. I think most of the time people are not interested in selling, and then sometimes they are. But you've got it's the least consolidated asset class in all of real estate. You have less institutional money owning mobile home parks than anything else, which means the vast majority of them are owned by baby boomers who are retiring. And right now, you're probably having a lot of them getting crushed in the stock market, which means that they're likely going to need to sell, right? Get a pile of cash to be able to live the rest of their life on.
And again, I don't want to oversimplify this. Now, they say, yes, I'm interested. And this probably falls under, correct me if I'm wrong, storage units and like dumpsters, like dumpster land for like waste or something like that might fall under this category too, for these undesirable places that you could capitalize on a return on investment and some sort of cash flow. But anyway, they say, yes, I'm interested. You have created a system where you could use other people's money and leveraging your insurance policy, if I remember correctly, leveraging your credit. There's certain strategies that but there's ways to do it even if if you're not capital rich. So they say, yes, I'm interested. And they say the mobile home park is valued at, I don't know, 1.5 million. I don't know if that's is that approximate?
Sure, they can be any value. Okay, they can be hundreds of thousands and millions.
So let's say it's 1.5 million, just an arbitrary number. What would the next step be? Do I need do I need capital? Like, how much capital do I actually need, or how much capital do I need to have access to? Do I need to create like an LLC and get a bunch of crowdfunding for this LLC that we can go in and get 20% down, which would be 300,000 to put down for this? Or is there, again, I don't want to oversimplify things, and I also don't want to make things too complicated, but could you fill in some of those gaps?
Yeah, I think anytime you buy real estate, you should always use an LLC. That's for liability protection. That's really important. And you should not use the same LLC. Every separate asset should have a separate LLC. That's very important, very foundational. That will save you a lot of headaches in the long run. From the standpoint of, buying one, yeah, generally it's like 20% down. I mean, most banks will do it for 20% down. So in this example, you need 300,000, but it doesn't have to be all your money. It could be raised. It could be partially yours. It could be half yours. It could be a teeny percent yours. I think most investors probably want to know that you're putting something in it, but there are all kinds of investors. Some are okay if you don't. But I always like to ask, so I'll ask them, hey, if you are interested, what's the price that you would want for it? I just ask them. Sometimes they come in really low and sometimes they come in really high. And then what I do is I say, okay, and would you be interested in carrying the note or financing that? And often they do. And I'll just say, hey, I'd rather pay you than the bank. Why have the bank make 5% when you can make 5%? And if anything goes wrong, you can take the property back. So you're not out anything. So it's a real nice position for someone that, I would assume a lot of the people retiring that are owning mobile home parks and owning, even small businesses, I think they know a lot about the thing they do. I don't know that they know a lot about investing. So maybe at the time when they were learning about investing, like a CD was the thing to do, right? I mean, I remember one of the baby boomers that I bought a park from, they're like, yeah, when I used to have money in the bank, I had it in a CD and I used to make, 12%. And it's like, well, that's not the reality today. And I'd love to pay you, if you had money in the bank now, you're going to make less than 0.01%. But I'd love to pay you 5%. And, that way you have cash. I mean, one of the people I bought a park from that financed it, the seller financed it, he said, I just want to find a buyer who can pay me my payment on time every month so I can ride it off into the sunset. And I remembered him saying that. And so in my pitch to him to do this, I said, I just want to be the person that pays you every month automatically. You never miss a payment so that you can ride off into the sunset. And I mean, he was ecstatic about that. I don't know if he realized I used his own language with him, but it was perfect.
So just to clarify, this mobile home park owner, let's call them Jim and Dottie. Those are like kind of old person names. I don't know. So Jim and Dottie, they say, yeah, I'm interested. Okay, will you carry the note? Yeah, we'll carry the note. I'll pay you the 5%. So that means they're going to get 300,000 up front. So they get the 300,000, which we're going to give to them. And then we're going to pay them 5% of the remaining 1.2 million is each month. 5% times 1.2 million, which is 60,000. Am I
well,
60,000?
Yeah, we probably wouldn't do an interest only. So we would just amortize it the way a bank would. So my favorite tool is mortgagecalculator.org. You can just plug in any numbers there and it will calculate the amortization schedule that a bank comes up with. So that thing is super handy. Anytime I need to figure out what my projected payment is, that's how I do it. So that'd be a principal and interest payment as if you were using a bank, but they are the bank.
And there's benefit to that because it mitigates the legwork that you need to do as the buyer, right? I mean, for you to have to go get approved and everything from there. So that's the ideal situation for the buyer in this case, right?
That's right. My first 2 parks were seller finance, and it made it a lot easier to navigate because you have the hoop of being a first-time, in some cases, being a first-time real estate investor. And if you're not a first-time real estate investor, you're a first-time mobile home park investor. But once you get one, it's really easy. And if you have enough banks and enough competition, it's easy even when you're brand new. I mean, I always just put the banks up against each other. Hey, I'm looking for the best terms. I got a few banks dueling it out. Here are the terms that are the best terms so far. I'm probably going to go with that bank unless you can beat them.
This is awesome. Thank you for that. Here's a question I have, and then we'll go to the chat and see what some questions there are. What would you say to someone who is the balance between learning all this stuff takes time, right? That's going to require time and focus and energy, and the amount of time or to manage it and learn it. So it's like, if I'm going to learn how to do this and I'm going to manage how to do this, then it's going to take time away from my current focus, my family, my business, whatnot. How do you know if to get a return on your time investment to learn all this stuff, or put your money up and just get a return on your money to pay someone else to do it for you? How do you decipher when either of the two makes sense?
Well, I think it really depends on what you value most in that season of life. When I was younger, I wanted to make the highest return that I could. And so I was willing to put my time into everything that I did so I could learn it and so that I could maximize the return. That was worth it for me. And I did that while I was doing something full time. I did that part time. And then eventually I got to the point that I could take the part time thing and make that full time. Even though in mobile home parks, it's really hard to do them full time because there's not enough, I don't know that there's ever 40 hours in a week to have stuff to do. It's just hard.
You
it's
have
like
a property
an easy
manager that you would have to hire that manages the property, right? And upkeep everything, especially if it's in Indiana, using our example, and you're working through people. So I'm assuming you have to have some of that in place to manage a staff that manages the park.
Yeah, I think it's good to have one of the residents that can manage the property. And it's a lot cheaper than you think. This is not like an apartment, this is a different type of multifamily where expectations are a lot lower. But yeah, I mean, I think that it's, in whatever season you're in, you might need to maximize the return. Right now, I'm in a season where I don't want to spend any time doing it. So I would much rather maximize my time, but still get a good return. But I don't have to have as good of a return anymore. So I think it's just personal preference. Some people have the time to pick up, kind of a side gig. Some people don't have that time. Some people have the desire. Some people don't have that desire. It's totally personal. For me, I knew if I learned how to do it, I'd be better at delegating it. So I at least wanted to do everything that I would eventually delegate out to someone else, so I wasn't going to be taken advantage of. But the flip side of that is if you find a really strong operator, and you've got a fund or a syndication where it's a group that this is what they do, then they're going to do it really well.
And you mentioned the cash flow, obviously cash flow, because your rule number one, your commandment number one, lifestyle first. So you need to know what type of lifestyle you have and what type of lifestyle you want. And your description of you were the first lion. I really love that in your book where you described it's like this lion wakes up, he looks at his 8-figure portfolio and a 7-figure bank account. He goes to the gym, gets a workout in, gets quality time with his wife and his kid. And it's like such a beautiful picture. And then you're like, that lion was me. I had to do this for myself before I could help it with my clients. And you know what lifestyle you wanted. And now I heard you speak on one of the other podcasts. You spend 5 hours, 3 days a week doing quote unquote work. And then you have the weekend, which is family time. And then Friday and Monday is open for really whatever you want to do, whether it's creative time, creative space for yourself, or working in your business or working on yourself or whatever it is, which is beautiful. For you specifically of where you're at, I believe, I could be wrong, but I believe most people that are listening would really desire the opportunity for that lifestyle. So your investment deals that you are looking to do is lifestyle top of mind first, because if I want to have the freedom to do this, I need to position the cash flow to come in consistently, which has allowed you to quit your job and allow your wife to quit her job. So the cash flow deals, if you could just run through that list one more time so everyone hears it loud and clear. You got our mobile home parks. You said you could buy a pre-existing business. You said maybe storage units, bringing cash flow. To break it even down simpler, maybe are there other ones that we could just list out for us to do our research on and really look into some of these industries or some of these cash flow vehicles?
Yeah, so I like industrial distribution centers, self-storage. For the right single family homes in the right markets, I like that. But keep in mind, single family homes are not sold based on net operating income. They're based on comps. So it makes it a little bit more subjective. So at scale, I really like it. Or if it's a one-off, if it's in a really hot market that like Austin, I mean, Tampa's becoming pretty hot as well, but I don't know the stats, and I don't know if that's year round, and I don't know, if you can have something support it. Like in Austin, you can buy something that every single weekend can be full, and they're likely many times during the week. So even on a short-term rental, I mean, it could be really pretty close to fully occupied. So the short-term game, though, is a little trickier, and you're banking on the market and the season and not another COVID, where travel ceases. So I don't like it as much, but I still like it. I just think that if we do have a downturn that is significant, you'll see it in the housing market, but I still like it at scale. And then, I really like mom and pop businesses. I like small businesses. I like businesses where they're about to retire. I like businesses that are sticky, meaning that your customers stick around, the revenue, the profit sticks around. There are a lot of good businesses in that space. I like RV parks. I like apartment complexes, but I'm going to put I like them a lot. The danger here is that everything is overpriced, in my opinion. So if you can find a multifamily apartment deal that is priced well, that has conservative numbers to get the return, then I think that could be great too. But most of the deals I'm looking at there, I do not like, even though I like that asset class a lot. And I think that the supply demand is very much in favor of owners of that space.
And this idea of the mom and pop with the loyal customers, I really am interested in this because it's kind of similar to the mobile home park where you get these boomers that are, maybe have their money in the market and they're kind of, oh my gosh, they're maybe cash poor or whatnot, and they might be appealed. Is it a similar approach where it's like, hey, I'm in the market to buy a pre-existing business. Are you interested in possibly selling yours? Is it as simple as this?
Oh, for sure. Yeah. I mean, you got a lot of people are looking to sell. Here's the funny thing about a lot of these baby boomers. And I know a lot of people that this is what they were planning. They were planning to retire. Their kids didn't want the business and they were just going to shut it down. Period. So if someone actually offered to buy it, they would sell it because they were planning to just unwind it.
How would you structure that deal? I know you have
structured as a seller finance. I mean, hey, I'll buy it for, I mean, you can say, well, hey, what do you want for it? Or, I mean, you can make an offer. I like them making the offer because I don't know what it's worth to them. So I'd like to know that number. And then, well, hey, what if I, give you X now and then I pay you a percentage of sales over the next year or 2 years to buy you out? Or in some cases, I mean, we have people in my mastermind that buy businesses all the time for nothing down and then just give them a percentage of profit or revenue or whatever's agreed upon for 1 year in one case, for 2 years in one case. So really fascinating. But yeah, you can treat it from a seller finance standpoint, just like you do real estate.
And are there certain industries you would avoid, like restaurants or like the food industry, or versus like because more than likely they're probably brick and mortar. Most of these boomers probably don't have these online businesses, I would assume. But I'm assuming that you might want to see an e-commerce component for that business where you could grow it and scale it or expand it using the entrepreneurial focus, unless I'm reading between the lines a little too much. Okay.
Yeah, there's plenty of businesses where, I mean, I'm not a big fan of food and beverage. I have not experienced a tremendous amount of success there, and I find it very challenging. Some people crush it in that space. So it's not that it's a bad investment. I just think you have to be really good. You have to really know what you're doing. You're probably going to be a lot more hands-on owner operator type versus like franchises. I love franchises because there's a playbook. You can plug in an operator to run it. And I've done that, a ton of times too. But yeah, a lot of these businesses I like because they have no online presence. So it's really easy to get more customers.
Any specific examples? So it's not food and beverage. What could be a list of a potential mom and pop shop type of examples that you've either done deals with or we could potentially look for?
During COVID, I bought a dog training company. I don't know anything about dogs, but I know that people were buying a whole bunch of them and complaining that they were making a mess. And I figured, well, there's an opportunity here. So I bought a dog training company. Again, I'm the least knowledgeable person on dogs out there. I've never owned one. And so that business performed really well and it was really sticky and they did not do a great job with their SEO. And so we fixed that and had a ton of people come in. Patrick Mahomes, the quarterback of the Kansas City Chiefs, trained his dog in our studio. It was in Kansas City. And that was an incredible business. And we sold it at 1 year and a day so that we got long-term capital gains tax for an 11x. So that was a really quick turnaround for a high profit. We got it at a great price. I only had to put $100,000 down. The rest of it was financed by my bank. So that would be like one example. I mean, I've done this with other businesses. I've done this with other franchises. There's tons of franchises out there that are just incredible opportunities. There's a franchise that I just invested in on the ownership side of the entire franchisor. And I think that one in itself could be one of the best opportunities out there. It's this company called Boulder Design and Border Magic. And it's 2 different franchises. And these operations are minimal work, but a great return and a really small team to run it. So it's a pretty cool opportunity.
I was thinking about the joint, like the chiropractic service. I was thinking that, I know you did Orange Theory in the past. There's like, when you say franchises, those are a couple of the ones that showed up for me and like came to my mind, and just seeing the models of what some of those would look like. And that's why I love the dog training company. It's just like your concept in the book, you talk about the invisible deals, the deals that you're not going to go find on the Facebook Marketplace or Craigslist or, someone's going to post, hey, I'm looking to sell my business. It's kind of spotting these invisible options. And you've really done such an unbelievable job with showing your clients and showing your community. I mean, your whole podcast. I mean, I'm listening to I've devoured so many episodes preparing for our conversation. I've I was joking with my wife. I was like, I've been waking up and sleeping with Justin Donald for the last couple of weeks. It reminds me back in college when I watched his training videos where I would wake up and go to sleep with Justin Donald. So it's full circle, man. I got, but I just feed in my mind with how much knowledge you're already giving for free. And that's available. So again, I can't thank you enough for giving us your knowledge and your information. And I know we're kind of coming up to the exits here shortly. So I'd like to make sure that some of the individuals in the chat got some of their questions answered. I know I have a few more on my list, and I want to honor your time because I know what we agreed on, and I know we're kind of already over that. So if you want to speak to Michelle's thought, if we didn't answer it already, she said, I'm getting ready to pull the trigger developing an RV park. And considering what's going on with the economy, is there any reason I shouldn't move forward? My main concern is that I'll put up the money to get permitting done and the package completed for an investor, and I won't be able to attract an investor because this may not be the best time to do so. Any thoughts for her?
So the development side is always tricky. Getting zoning is complicated. So Michelle, I would say, what town, city is this in? And you may not be able to unmute. I don't know what if you are or aren't.
Yeah, she could unmute.
Okay.
This is actually north of Crystal River in Inglis, Florida.
Okay.
It's kind of out in the country, and zoning is not a problem right now. It's already C3 commercial.
Great. Okay, so that's helpful. And how big is the population around it?
I don't know the exact population, but I do know that there's two highways, the Florida Turnpike and the Suncoast Parkway, are going to be dumping out on US 19, which is where this is located, which is a heavily populated, or traveled, I should say, area.
Okay. Yeah. And so your plan is not to develop it. It's just to buy the land and basically sell to someone else who can develop it, or you want to see the whole project all the way through?
I'm going to see the project all the way through, and I want to have a 5 to 7 year plan.
Okay.
Either exiting, or if it's doing so well in the cash flow, I may keep it.
Yeah. Well, I would look to make sure there's at least 50,000 people in the metro of that area. If you go to bestplaces.net, that's a great resource to figure out populations and a whole bunch of other things that you may want to know. But, I think there's different kinds of RV parks. So the RV parks where people just stay, they don't leave. It's a little bit more permanent. And then there are ones, and I would imagine, so there are plenty in Florida that are just permanent. Like people stay there year round. And then you've got other ones where the snowbirds come, right? And so it's very seasonal. And then you've got other ones that are just like a totally transient by the night type of one. And so I don't know what what that area is, but if you got the population to support it, I think that's great. I think the land is probably just going to keep appreciating. So even on a worst case scenario, it doesn't work out. It's not like you lost all your money because you've got land that's going to keep growing. But without more of the information, it's hard for me to say, but I don't think that it's crazy. I think maybe you put in here, is it crazy to do this or something? Or your main concern is putting up the money. I don't think that I think that it could work. You just want to do some market research for that area. That's what I'd say.
I will have an economic impact statement in the package. Yeah.
Okay. The other thing is there a second purpose? So let's say that this doesn't work. Would someone else want to build something else there to make it easier to exit? So those are all the things. And then another thing I consider is, can you buy an RV park for less than building this one? And just compare it. If you're pretty handy, people that are handy. If you've got the connections, it's amazing what you can get done on a development side and how cheaply you can get it done. But not everyone has those connections. And sometimes people use, vendors that are not really skilled or as skilled because they're getting a good price, but then they screw stuff up.
Right.
Well, two things show up. Number one, I think I connected Michelle and Justin. I think I connected you on Facebook Messenger like 2 years ago. So I think I think that might be the case. So you're welcome to continue that if you want. And number two, I would say, as you were talking, Justin, I'm just going through the list of the 10 commandments that are in your book, and it's like, as you were talking, lifestyle first, reduce risk, find invisible deals, get principal back quickly, create cash flow immediately, find income amplifier plus the deal, cut the fat or the fees, use leverage to your advantage, and every dollar of investment gets a return. And I'm just looking at your list as you're explaining that to Michelle. I think that's a good rule for everyone. And if I'm not mistaken, anyone can get your book for free to just pay for the shipping. Is that still the deal?
Yeah.
That was for me.
Yeah. So if you go to lifestyleinvestorbook.com, you can get it for free. You pay the shipping, and there's some other freebies I think that come with it. And then, so I would check that out.
Thanks so much, Michelle. I appreciate.
And to Tara or Tara, I don't know how you say it. Tara is going to be my guess. I am less than 1% in the stock market. I'm likely even less than 0.5% in the stock market.
And then Casey asks, what's your greatest resource for better understanding the tax advantages?
Tax-Free Wealth is probably the best tax book. Tom Wheelwright is a friend. He used to be, well, he still is, but he became big because he was Robert Kiyosaki's CPA. So he's part of the Rich Dad, Poor Dad organization, the advisors. And I just had him speak at my conference, and our team loved him. He was amazing.
Great. And then thoughts on investing in an Amazon store, Nolan asked.
Oh, and real quick on the tax stuff, get a killer CPA. Like, spend the money. They will make it back for you. But you have to have CPAs, one, that are aggressive, and they're following the tax code, but they're getting you every tax advantage that you should get. A lot of these CPAs, or a lot of them aren't even CPAs, they're just paper filers. They're like afraid of an audit or afraid of using the tax code. It's absurd. So if you don't have a CPA that's like aggressively fighting for you, and then secondly, like bringing you opportunities to save in taxes, it's time to find another CPA, because you should have great resources there. I mean, this is like foundational. Like, in one of the things I do with my private clients and with mastermind members, with all of our Lions, is it is so important to have the proper tax planning. So we talk about tax strategy and then tax filing, and having one of each. And I don't know that you have to go that far. You can find it, but I just had 3 people speak on taxes in the last 3 months, because now is the time.
And a challenge that entrepreneurs have is they try to save as much money, or like they try to write off as much, and then it lowers how much income they're showing. So then they can't get established as much for like a life insurance, cash value life insurance policy, or be an accredited investor or something like that. So say an entrepreneur is making 400 grand or 500 grand, but they deduct, 300 or 400,000. It kind of saves them on the taxes, but it also might hurt them on how much line of credit they can get and how much they can qualify for a whole life policy. Do you have like any idea or thought for that individual, for like what makes most sense for them?
Yeah, I mean, your number one expense is taxes. So I think you just got to mitigate that as best as you can, and you need to know the levels, because you might. If you go from 37% down to like 20%, that's a big deal. So how much is it that gets you down to a reasonable amount? Can you get down to 12%? Can you get down to 0%? There's a certain point where you really want to get to. And then the other thing is, there's always specialty lenders that understand entrepreneurs, and you just need to find them.
Where might be a place someone to find a specialty lender potentially?
Local banks are fighting for business. They're fighting to, take it away from the regional and national banks. So develop a great relationship with a local bank. And then if you can't get to where you need to, just get a whole bunch of banks together competing. So a lot of banks are uninterested until they find out another bank is interested. So that's like the oldest trick in the book. You didn't want my business? Oh, well, I got these other banks that do. I'm surprised you don't. And they're offering me better terms anyway. So I'm probably going to go with them. And then they always come back and, try to beat them. It's hysterical.
It's awesome. Last question is, if Savannah, your daughter, Savannah's probably like...
She's 9. Yeah.
9. So Savannah's 9. Let's say Savannah ran an awesome kick-ass lemonade stand, or sold newspapers like her pop, and then sold Cutco like her pop. And she has 10 grand, 20 grand sitting there. What is the strategy that you would say, Savannah, this is where I think you should put that money first?
Well,
now, I guess you should say.
Yeah, she just did a business fair. She makes her own jewelry and clothing and stuff. And so she just had her biggest profit business fair. Now, it was only $76, but that was big for her. And she used an Excel spreadsheet that tracked everything, that broke down savings, giving, spending, and tax. It's just incredible, what she's learned at a young age. But, I think at that price point, she asked me, can I invest in your business? And I said, oh, this is great. You're learning some things. This is awesome. Sometimes she doesn't want anything to do with, what dad has to say, or she doesn't want education from dad, but I think it's still, it's sinking in a little bit. I'd probably have her get some Bitcoin, maybe even some Ethereum, invest in some sort of cash flowing real estate. If you use like Peer Street or there, depending on...
You froze for a second. You said Pure Street and then froze. I thought you were teasing me.
Oh, Peer Street and Crowd Street, and Fundrise, and there are a bunch of them. But yeah, you can get like fractional, pieces. You can be an LP for a small amount.
Fundrise is REITs, right? Real Estate Investment Trust.
Mm-hmm.
Yeah, that's cool. Pure Street, Crowd Street, and Fundrise, plus some Bitcoin, Ethereum, and see if there's a chance for cash flow.
Yeah, and if you can find a business, for her, this wouldn't make sense. For everyone here, you can buy businesses for no money down. And so you could, let's say that you're sitting on 20,000 cash. Doesn't mean you got to spend all that and buy a business. Like, there are tons of great businesses out there.
Such as a dog training company, Boulder Design, Border Magic. These are a couple that I wrote down. Any others that come to mind that I should capture?
I invested in a laundromat. I invested in car washes. I invested in music royalties. My goal is to have exposure to everything. I want to learn everything, and I want the diversification of everything.
Gosh, is there anything else that we should know? Before I wrap up, I have links that I'll put on the screen, and I'll share them as well. These are from the podcast I listen to, and also from your website. Is there anything else that you could share with our community? Anybody who's listening to this recording, that I didn't ask you that I should have? That are like, I sent you a list of questions. You're like, come on, Mike. Damn, I thought you were going to ask me that one. That was a good question. You didn't ask that one. Is there anything that we missed? Because I know we're out of time, but I don't know the next time we'll be able to do this.
Well, I read through all the questions. I actually think this last question is probably the most pertinent right now from Tara about, is winter coming? You have really smart people that think that it's not, and that this is a blip on the radar and things are going to keep going up. You have other really smart people that think that we're headed towards a recession. You have some people that think we're already in the recession, yet most people don't realize it yet. I tend to be in the group that thinks that we are going to hit some turbulence and we are going to have a winter around the corner. I think it will probably hit this year. I don't know. I could be wrong. I most certainly am never going to go, I don't ever want to go on air, although I'm kind of on air right now, saying anything. I'm not going to say anything definitively, but I am prepping as if we are going to hit a recession. And so I'm thinking, okay, the dollar is going to get crushed. Inflation is going to go through the roof. I want to be in hard assets that produce cash flow. I don't want to be in cash unless my purpose for being in cash is to stockpile enough to buy assets when they're at a discount. But if you're just sitting in cash because you don't know what to do, that isn't good, because your cash will become worth less. Now, how bad is it going to be? I don't know how bad it's going to be. Some people think this is going to be like the worst one any of us have ever experienced. Other people think this is going to be short-lived. I don't know. I just like to always plan for the worst and hope for the best. I don't want to live in fear, but I do want to be smart. So if I think a recession's coming, then I'm going to make investments today that are very strategic for cash flow, that are very strategic for assets that are going to appreciate in an inflationary environment and in, a down economy. And then I'm also going to try to assemble as much cash as I can that I don't invest into things, so that way when there is a deal, I can be ready for it. Once, prices come down on certain assets, I can pounce.
And that cash alternative or high interest accounts with liquidity access, would you put crypto in that category or gold in that category? Or is there different places that you think for that high interest account with liquidity or cash alternatives?
Yeah, I mean, gold is not as quick to kind of turn around into cash. I still think it's good. I still think it's a safe way to do it. And in time, you can liquidate it. I think most cryptocurrency is not going to be good. I probably wouldn't use stable coins unless, I just probably wouldn't use it. I don't use them. A lot of people say, don't use the algorithmic ones because we saw what happened with Luna, but use, asset-backed stable coins. I wouldn't use any of them because I don't think
perfect. That's what I was looking for. So that's good.
Yeah.
I'm glad you said that, because that's what I would say. So what would be a cash alternative or high interest account that has liquidity? Because you said you would want to keep the cash accessible just when that deal happens and they're on sale, but cash is decreasing in value. So put it into some sort of asset that's ideally trying to gain something, but it's also accessible. I know I told you it was my last question, so I'm sorry.
Well, I think that the high interest accounts, you're going to run the risk of, maybe leverage issues depending on what their leverage is. So like my advice in, a bull market has been to really find these cool hard money lending funds that have quick liquidity. And I love that. And I get concerned about that, though, if there's not enough leverage, if inflation's getting really high and the inflation is higher than the return that we're getting. So, at least you're potentially breaking even there versus just sitting in cash. But depending on the groups that you're investing with, they may not have weathered one of these storms yet. So if you don't know what to do, maybe it's starting with a percentage in Bitcoin, a percentage in gold, a percentage in silver, a percentage in cash. And
that's cash just sitting in your savings account, getting like 1%. So it's not necessarily about too much strategy there. Maybe there's a high yield savings account of some sort.
Yeah, I would probably have cash in a safe outside of your bank, because if there is ever a bank run, so there was that short little bank run in Canada not too long ago. And that was played off like it wasn't a big deal. Like that was a big deal. Like that was a major red flag. That what we saw with, the banks freezing people's accounts for suspected activity and whatever it is, even though, this is guilt before trial. Like that's dangerous. And then you have people that are like, whoa, the government's actually doing this. I'm taking my money out. And we've seen this happen all over the globe, in Cyprus. And I mean, just bank runs are a thing. And so you just have to be careful. So I try to
under the mattress, literally take it and put it under the mattress.
I like having a safe. It doesn't have to be on property. It can be on property. I don't like having more than $250,000 ever with any single bank, because FDIC does not cover beyond $250,000. I like having multiple banks because all of our banks are highly it's very close to insolvent. I mean, something goes wrong and they can collapse. U.S. banks, even though people think they're super secure, they're not. Life insurance companies are like infinitely more secure than banks. And I also don't trust banks. I've seen them freeze people's accounts that have never done anything wrong when they needed that money. And so they had to spend the legal to fight it, not being reimbursed, to get their own money back. That's just not right. So I'm just very cautious about where my money sits and who has access to it, and I want to have access to it.
Justin, I'm not going to ask another question. I'm just going to give gratitude and say thank you so much. I don't know if these links are updated or not, but this is what I found. One from your book, one from your podcast, and the actual podcast. So there was justindonald.com gift. So that was in the book. And then there was justindonald.com/MHP, which is information on the mobile home park course that I believe is valued at like 10 or 15, 20 grand. But you're doing this course for like $997 is the offer, if I'm not mistaken. And then there's the Justin Donald podcast, which has upwards of almost 100 episodes now with just some of the most fascinating minds in the industry of lifestyle investing. Is there any other link that you might think is appropriate? JustinDonald.com/gift, MHP, or podcast? Anything else?
Yeah, I mean, if you just go to JustinDonald.com, I've got a blog. You can check that out. So I've got tons of free content between the podcast and the blog. I've got another masterclass on passive income, which was a full day session that was repurposed to be a little more on demand. And then, our mastermind as well. And so the mastermind won't be a right fit for most people, but all the other ones could be, depending on your place, kind of where you are in your journey today. So again, tons of free stuff, tons of lower cost items, and then there's some in the middle and some high price stuff, but there's something for everyone. And then just as a reminder, anything that anyone ever does with Lifestyle Investor, just like the book. So all the proceeds of the book go to Love Justice International. They stop human trafficking in 24 countries around the world. But a percentage of the Lifestyle Investor brand goes towards that as well. So, so I just want to make sure that people know that. And, I probably don't need to say this, but I feel compelled to say it. I've never spent $1. I haven't even spent a penny of anything the Lifestyle Investor brand has made on myself, on my family, on consumption, on anything. It all goes towards founders, investments that I think are good, people that I want to support, charities, movements, organizations, that kind of stuff. And so my goal is that this brand is the catalyst for a lot more great things in the world, great things in the form of entrepreneurship, in the forms of investment, in the form of supporting people in whatever their walk is.
Justin, you lead an amazing life, and I'm just so honored to know you, and I can't appreciate you enough for you to show up today as a servant leader for our community. Is there anything that we could do for you? This recording is going to go out to, hundreds of people, hopefully thousands and tens of thousands of people, but it's at least going to go to hundreds of people in our private community. Is there anything that we can do for you, Lifestyle Investor, or the causes that you mentioned that we can, support at all?
Well, I'd say, spread the word. If you know someone that's the right fit for anything, share it with them. And if you like the stuff that I'm producing, I would love for you to, technically you can't rate on Amazon unless you buy on Amazon, but you could go to Goodreads if you do the free book version. and rate it there. I think there's some sort of algorithmic team up there. And then my podcast. I mean, the more reviews, the more positive 5-star reviews that I get, the more the word gets out there. And so, I want to teach people how to buy their time back. So if I can do a better job of that, I want to do that.
I am forever grateful for this conversation and for the videos I watched of you when I fell asleep to you growing up, watching the Cutco training videos back in the day, and preparing for this interview as well. Just in our volleyball extravaganza in Austin when I was there a couple of years ago. You're just a true blessing to so many people, and I'm just extremely grateful for you and your resources that you provided. So thank you again, truly. Thank you.
Thanks for the kind words, Mike. Always a pleasure to connect, and love seeing what you're doing for the group of people that you're able to connect and build community with. Very cool. It's a pleasure to be here. I'm heading out. Sorry, I think we originally had a later date, and I had to move my flights around. I'm heading out to France for the Cannes Film Festival and F1 and Monte Carlo. So I'm looking forward to that, and then doing some wine tasting in Bordeaux. So looking forward to it. I'm heading out here in just a few hours.
You deserve it all, brother. Thank you so much.
What's up, guys? Biggs here. I hope you enjoyed that clip. If you did, go ahead and check out the other video that's being recommended on the screen right now. You can also subscribe to our channel. And then if you really are interested in what we do, go to automatedelegatesystemize.com to learn more about what we're up to. Thanks again.